Good morning. My name is Paul Edwards, your investment specialist with New York Life. Welcome to Investment Wednesdays. I help individuals and business owners to plan and save effectively for that period of time in your life when you will choose not to work as hard as you are doing now. And I also help you to protect yourself and your loved ones with life insurance, long-term care. And here at New York Life, we also help you with estate planning. You know, on a Wednesdays, I discuss investment issues. And today I'm going to speak about the importance of retirement planning. And this came out of a question I was asked yesterday by a client who called me and said, Paul, I want you to help me to plan effectively so that when I want to retire, I can do so comfortably. So when you meet with your financial professional, or if you have a financial professional, they should have already asked you this question. Any financial professional is worth their salt should ask you a couple questions. This is what I ask. At what age do you plan to retire? Most persons say, I want to stop working at 65. Some will say, I want to stop working at 70. The time span is up to you. Second question, and this I find most persons have never been asked. How much money do you want to earn in retirement? I have spoken to many persons who are saving in their company's 401k, and they say, I'm saving for retirement. And when I say to them, how much income do you expect to get when you retire? They say, I don't know. I've never been asked that question. And that is very important. So when I ask a client, how much money do you want in retirement? That will tell me if what you are doing now is going to allow you to meet that objective. That is very, very important. The reason being is, let us use, for example, an individual is 50 years old and they want to retire at 65. That means they have a 15-year span to do that. And if you ask them, how much do you want? And let us say, they say, I want $100,000 in retirement income per year. That 100,000, what you do next is take away what they are going to get from Social Security. So the maximum payout in Social Security is approximately 36,000. So I'm using that figure because of ease of calculation. So when you minus 36,000 from 100,000, you are left with 64,000. That 64,000 is going to have to come from their retirement account. And we normally calculate 30 years span in retirement. If you reach 65, and especially if you are married, there's an 80% chance that one or both of you is going to live to age 85. Then there is a 30 or so percent chance that one or both of you is going to live to age 95. So we do a 30-year span. And this calculation now, remember, I am not adding in inflation or anything like that. This is a basic to give you an understanding. So if you multiply 64 times 30 years, comes out to 1.9 million. Just round it off at 2 million. It means you are going to need approximately $2 million in your retirement account to be able to have 100,000 in retirement. Now, I use 100,000 for the ease of calculation. You know what your figure is. Some persons will say 50,000. some will be 200,000, some will be 400. You know what it is. But what you kind of use to determine it is how much are you earning now? Because a lifestyle lived becomes a habit. And you most times you are going to want to maintain that. Some individuals say, but when I'm older, I will not need as much money. We have seen that that is not so. What we have seen is that you have other costs come into play. The older you get, healthcare becomes an issue. Even though you are on Medicare, healthcare still becomes an issue. Then you find long-term care becomes an issue. So generally, most persons are still paying their mortgage at that time. So your standard of living tends to still to be the same. So the wise thing to do is to plan effectively. So these are the questions that must be asked, and these are the questions that must be answered. Because if you fail to plan, it is certain that you shall fail. So it's always important to have this discussion with your financial professional. If your financial provider is worth their salt, they should have always asked you this question and have a comprehensive plan in place. When I work with my clients, we do a holistic plan. We look at tax strategies to maximize and to minimize all that we can. We look at your long-term care. We look at life insurance to protect yourself and your family. We look at health-related issues. And finally, but we do them in different stages. We also look at estate planning. So you can call me at 321-557-1155. If you are contributing to a 401k, you must still have this discussion with a financial professional. Most persons who are doing that have not had that discussion. If you are working and you are not contributing to a 401k, then you should open your own individual IRA, a Roth IRA, your own individual retirement account, and begin to contribute to it now. You must save, you must invest. We are getting older every day. Have a blessed and wonderful, productive day. Always be investing, always be educating yourself. And any questions you have, you can call me, Paul Edwards, at 321-557-1155. Have a blessed and productive and wonderful day.